What's good, traders? Welcome back to another great video on how you can be able to make $500 every single week, traders. So in today's episode, I want to show you a strategy that relies around support and resistance, demand and supply, forex patterns, and Fibonacci retracement, so that you can have great trades and then be able to make $500 every single week, traders. So if you're new around here, guys, make sure to subscribe, turn on the notification bell so that you never miss out whenever I post a video. And if you're a returning subscriber, thank you for watching these videos, and I hope you're always learning always from these videos, guys. So let's get started. So traders, for us to learn about this strategy, this is just pure price action, traders. We're just going to be using pure price action, and we're going to do a forecast of trades that are going to happen next week. So whenever you want to make crazy amounts of money from the forex market, traders, the first thing you need to always backtest your markets. The first pair that we're going to be looking at is GBP CHF. This is called GBP CHF, or pound Swiss franc, and we're going to be using support and resistance, demand and supply, forex patterns, and Fibonacci retracement. So as you can see, traders, this is our nice forex pair. As you can see, this is the 4-hour time frame. So for you to use price action, guys, price action, you just literally have to look at the charts right like this, and then from there, and then just predict where price is going to go next, you know, when the market opens. So the first thing we have, guys, we have a trend line. You can see price is going up in an upward way. You can see this, traders. So this is the first thing that I'm always going to draw. I always draw out my trend line so that I can give price direction. But even though you switch over to the daily time frame, so the first thing I always want to do is draw out the trend. I always like to give price my trend, and drawing a trend line on the 4-hour time frame, that is the best thing you can do, traders. So this is our trend line, and we're going to make this color black. This is our trend line, as you can see, traders. So how do I do a trend line? I want to draw a trend line as long as I'm connecting these 2 points, this point here and this point here. It means this trend line is valid, traders. It is valid. Now the other thing we are going to do is we're going to mark out our support and resistance zones, and we're going to use this box right here to draw them out like this. So this is the point that I'm considering, this point right here, as you can see, traders. The reason why I've considered this box right here, because here price was more of a resistance. Now price has broken up here, and then now we have a retest here and also a support level right here. So now this is our support and resistance point. We can even mark out this other point up here. We can even mark out this other point right here. If you want, you can always draw this out. You can even mark out that point right there, but today I don't want to use it. Now the other thing I'm going to draw out, the second trend line, since I have price dropping just like this, as you can see here. So I'm going to draw another trend line just like this, as you can see, traders, just like this. Now what I have a clear symmetrical triangle. So whenever we have a symmetrical triangle, guys, price has to break out and go to the other side. So a symmetrical triangle represents two things. Price, it's sometimes a continuation pattern, sometimes it's a reversal pattern. So you can see we have had a symmetrical triangle just down here. So price has broken out of the symmetrical triangle, and then price has retested on our resistance, which is now support right here. So now we have applied support and resistance. We have applied the forex patterns, Fibonacci. Now the last puzzle piece, we are going to apply our demand zone. Now traders, when I mark out this demand zone, you're going to see that this is a demand zone. When I mark out this candle right here, this is a demand zone. If I mark out this is a demand zone, as you can see, traders. Even price switched there and pulled back up. So price has respected my demand zone, but I'm not going to use the demand zone right now, since the demand zone, that is also where price is acting as our support and resistance. So my last puzzle piece, traders, is the Fibonacci retracement. That is my last puzzle piece. So my last puzzle piece is the Fibonacci retracement. So when I'm applying my Fibonacci retracement, I apply it from the swing low to the swing high, just like this, as you can see. So I want to see price reverse from this level right here, the 50 level or the 60 level right here. You can see price pulled back from the 0.6, which you can call also 61 level. you can see we had weak rejection already, right? And price was just testing the support level. So right now we need to see a push to the upper side. So now what we're going to do, traders, we're going to mark out another point right here. So when price breaks it and retests it, we're going to be taking our nice trade, guys. We're going to be taking our nice trade. So what we do is zoom out like this. Now we're going to draw this other level right here. So this is the level that I'm going to consider, traders. This level. So that green line that I've drawn, traders, is what I'm going to consider. So when I zoom in just like this, you can see. So the reason why I'm considering this level here is because this level is acting also as our support and resistance. And you can see when price broke out here, it came back and closed from inside. So when price broke here, it came back and closed from inside. Same to this candle's price closed from inside. So now price, we have had price break out here. So if this candle closes from outside, we're going to be taking our trade on the next candle, traders. If this candle closes from outside, or when you wait for another retest, we are going to take our trade when price closes from, when it just retests and then it pushes back to the upper side. But if this red candle closes from back in here, it means price may first push back to the downside. And most of you know that whenever price breaks out and then closes back from inside where it has been broken, we don't consider that as a breakout. That is a false breakout. So traders, this is our trade. So what we're going to do is we're going to take this trade when it gives us our confirmation, probably on the smaller time frame. But when I zoom out just like this, you're going to see that we need price to push to the upper side, as you can see. So if I'm to take my trade, I'll definitely take my trade and put my stop loss just below like this. So I'll take my trade just like this, put my stop loss above here. So if I'm risking 30 pips or 50 pips, so these are I'm going to risk, I'll put my stop loss just down here, and then I'm going to put my target. So if I'm risking 40 pips, so these are 80 pips. So if I'm risking let's say 60 pips, my target has to be doubled, probably be looking at 200 pips, as you can see, traders. That is our trade, as you can see. But as you can see, that is the whole trade. We have a symmetrical pattern here. We have support and resistance right here. We have a strong demand zone in there, so I think price may shoot back up. But if price closes from back in here, it means we're not going to see a breakout to the upper side soon. So we should wait for price to come back to this point here, and then we take a trade off the bounce off here probably. So this would be our trade here, because this is our strong zone right here, traders. So let's go on to the next pair. So we're going to look at AUD/JPY. So AUD/JPY is another great trade pair to trade, as long as you're applying simple price action, as you can see, traders. So the moment I open my chart like this, I need to be able to try and predict all the major zones, all the support and resistance zones that I have in my forex market. So you can see this is my 4-hour candle. These are my 4-hour time frame. So the first thing, again, draw out your trend lines. When you see price shooting up like this, whenever you see price shooting up like this, you always take advantage of the trend line. You draw out your trend line so that you can give your price direction. As you can see, traders, that is my trend line, as you can see. So the next thing I'm going to draw out, I've already seen that price, this is a major zone right here. So I also draw out that major point right up here. This is another major point that I have right here, as you can see, traders. So in the first few minutes when you open your chart like this, you already know where price is going to go. You already know where price is going to go. As you can see, this is my nice pair, as you can see. So now again, this is another nice forex pattern that I always like to trade whenever I'm in the forex market. This is called an ascending triangle. An ascending triangle is a continuation pattern to the upper side. As you can see right now, we have price shooting to the upper side. You can see price has been in an uptrend. Now we have had that triangle come up. So meaning we need to have a breakout and a retest. And you can see price has already broken our resistance. Now it's going to act as our support. So again, we always want to use the Fibonacci retracement so that we can see how far will this price come down. So right now we haven't seen price start coming down. So we shall just wait for now a retest, since we don't know how far price is going to come down. We don't know if we always want to use the Fibonacci when we see price starting to come down, but right now we don't see anything. So probably what we're going to do is draw out this level right here, and then we wait for price to come back for a retest right here. So if price comes back for a retest, we're going to take our trade right here. Make sure that we have a stop loss 50 pips, and then we can measure out our target As you can see, 200 pips right there, traders. As you can see, that is our nice trade. As you can see, if you want, you can always make sure to check the smaller time frames and see what do you have on the smaller time frames. But me, by just me looking at my 4-hour time frame, I already draw out my structures, because I use my daily time frame to know the trend of the market. Then I use my 4-hour time frames to know the structures, the forex patterns that I have on my 4-hour time frames. Because when I discover them on my 4-hour time frames, they are more valid. So traders, I'm not going to waste any more time on the AUD JPY. Let me go straight to the Euro CHF trade. So traders, you can see we have Euro CHF here. So the forex market is very easy. We have 3 components of market structure. We have the uptrend market, downtrend market, and the sideways market. So right now what you can see, this is the sideways market, traders. You can see this is a sideways market. A sideways market is what you call, most of you guys call, a ranging market, as you can see. So either price is in an uptrend or it's in a downtrend. Either price is in a downtrend, uptrend, or a sideways market, as you can see. So whenever you have a sideways market, that one is one of the easiest markets that we can, when you are trading. All you have to do is draw out your major points, your points that are acting as support and resistance. Since price is coming up and failing to break this part and then coming down to find support. As you can see right here, price comes up here, goes back down here. So the process just keeps on happening. So on such a type of market, we just want to see a breakout. We just want to see a breakout. So what you do, you choose your box here, draw out, you're going to draw out these points just like this, as you can see. So this is what we're going to do, traders. This is what we have drawn out, as you can see. This is our resistance zone, as you can see right there. Then after, we draw also our support zone. We draw our support zone, as you can see. This is our support zone right here. So traders, as simple as that, as you can see. You don't need to complicate your trading, using all those indicators and all that. The only thing here, what you do, traders, you wait for your price to break either of these parts here, up here or down here, So right now it's a matter of just being patient, wait for price to come back to this zone up here, break it or come down here. But if you want to use a Fibonacci retracement, you can definitely use your Fibonacci retracement, because you can even see we have something like an impulsive move. And me, whenever I see an impulsive move, I always use my Fibonacci. So what I'm going to do is choose my Fibonacci retracement like this, and then apply it from the swing high, just like this, to the swing low, just like this, as you can see, traders. So now what I want price to come up to this 0.5 level. So if price comes to this level and rejects here, it starts bouncing off. So if price comes back to this 0.0 level and starts rejecting off, I'll know that price probably may be looking at reversing. But if price breaks this level right here, probably we're going to be looking at price going up this zone here, traders. So my main thing is just patience, traders. If price breaks my major zones on my Fibonacci, probably we're going to be looking at price reversing, coming back to the upper side. But if it doesn't, it means we're going to be taking our sell trades, so that price can break out. Traders. But again, this is a nice, as you can see, when I zoom out, you will see this is a nice, as you can see, traders, this is a nice downtrend market, as you can see. So, and again, whenever we are trading, we like to also trade according to the trend of the market. So probably this is probably a bullish rectangle, indicating that price is going to continue to go down. Probably we may be looking for sells of the euro Swiss franc, probably, traders. So again, simple thing, wait for price to come to back to the upper zone. Let's see if price will break out. We also have this fair value gap in here, that, or what you can call imbalance, that has to be filled. That's why I'm saying we need to use the Fibonacci. We need to use the Fibonacci. We have this gap that has to be filled. So again, when I apply my Fibonacci from my swing high to my swing low, you can see that where price has to, where my 0.6 level is, that is where we expect price to come to on our Fibonacci level. So, and hence filling up the fair value gap, and probably shall see price still come down. So probably here, if you want someone wants to scalp, you can scalp up a quick pips when price is trying to fill up the fair value gap that we have in there, traders. You can even see here we had fair value gap in here and it was filled, traders. You can see we had fair value gap in here and it was filled. You can see we had this fair value gap here and it was filled. So let me first draw out all the fair value gaps that we had in here that were filled. As you can see, these were all imbalances, traders, as you can see. So we had this fair value gap. This one here, it was filled. Same to this one was filled. Same to this one was filled. So probably even this one has to be filled. So let's see what happens, traders. But this is our nice Euro chef trade, guys. This is our nice Euro chef trade. Now let's look at another forex pair, guys. This is the gold pair. Gold is my last pair. And why is gold my last pair? Gold is my favorite pair to trade, and I can't go without trading, showing it to you guys. So let's put in gold here. So traders, this is my gold pair. Again, with the gold pair, we have price, we have price giving us more of a ranging markets. First things first, you always want to draw out your turning points. You want to draw out your resistance and support zones, all of them, and then you try and try as much as you can to predict where price is going to be going next, traders. So now this is our gold pair. Whenever again you're marking out, you need to know the market structure that you are dealing with. Is it an uptrend market? Is it a downtrend market? So this is more of a downtrend market, but again we see price more of reversing because there's change in structure. So the first thing I'm going to draw out this zone here, that is my support zone. So I like to look at this part, this side. I like to look at the left side right here, so that I can see what price has been doing, so that I can know I can draw my zones here. What I do, guys, I choose my box, come up here and draw my rectangle just like this. Very simple. So that is my support zone. So this tells me that this is a major turning point, traders. So when I zoom out like this, you can see that price was literally in an uptrend, as you can see, giving us higher highs and higher lows. Then this was a double top. This and this part is a double. This is a double. Then here price started forming lower lows and lower highs until now we have this. So probably price is trying to form whatever that was formed on whatever was formed this side. Whatever was formed this side is what price is trying to form this side. As you can see, traders, it literally just looks the same. But also, we shouldn't forget the fact that price can continue to go back to the upper side. So whenever we are trading, we are looking at two scenarios, traders. So now let me zoom into my gold pair. Now this is my gold pair. So I'm going to mark out my other important zones, which is this one here, this zone right here. So I'm going to use my rectangle and mark out this important zone right here, just like this. As you can see, traders, very simple. You don't need to confuse anything. You don't need to complicate anything. As you can see, traders. So now what we want this price to break out. We want this price to break out. Probably for anyone that is looking for buys or sells, you need to consider all factors. So the first thing, we have this price moving in the downtrend form, just like this, as you can see, traders. And we have price has broken that part there. And also we had false breakout here, traders. You can see we had the false breakout. What is the false breakout? The false breakout is whenever we have these two candles. The first candle, which is the red one, that breaks out of the support zone. So this is my support zone, this upper line. So whenever I have price breakout and then we have price go back in and close from up there, it means this is a false breakout, and probably you just need to take your trade there and then, sometimes after a retest, sometimes there and then. You can see, traders. So again, price went short back up, came back here, rejected with the candlesticks. Same thing happened here. We have candles that break out, close back from inside, indicating that that's a false breakout. Probably now we're looking at price to push back to the upper side right here. So right now we're just going to be patient. We're going to be patient with the price. So we're going to just be waiting for price to come to our zones. We're going to wait for price to come to our zones. Now our point of interest is this point up here and this point up here. So when price breaks out here, we want it to break out with the momentum. So this is what we want, traders. We want price to break, retest, and then we go to the upper side. That is what we want from that. But if price breaks from down, if price comes back to the downer part, we want it to break, come there, and then shoot back to the downside, and then shoot back to the downside like this. So that's what we're going to wait for. So right now we can't take any trade in between here. We need to wait for price to come and break here. But if price reaches here and gives us any candle rejection, we're probably going to be looking for sells until down here. The same thing that is going to happen here, traders. So these are all nice pairs, as you can see, traders. I've done a forecast. This has been a forecast, but whatever trade that I've showed you guys, we are looking to making 50 pips and above. We're looking to making 100 pips and above. So whatever lot size that you're using, guys, with all these pairs, if they play out the way you want, you can be able to make $500 every week. And I'm going to be doing another video next weekend when the week is closed, and I'll show you how much I will have made, but it's always going to be more than $500, guys. So if you have enjoyed this video, guys, make sure to subscribe to this channel, turn on the notification bell so that you never miss out whenever I post a video, and make sure to follow, these simple things: support and resistance, demand and supply, simple price action, guys, and you'll be able to become better traders. Let's get this video to 1,000 likes. Comment that you have enjoyed the video, guys, so that I can know that I'm doing a great work. So I'll see you in my next video. Peace.